Welcome to this video. We're going to talk about the best reversal entry and how we should be positioning ourselves to take entries on reversals and make sure that we don't enter too early or too late or at a bad price. So let's say that we think this is major support. For whatever reason, we'll just call that major support. We could call it a macro low, etc., etc. We've drawn a green box where we think hypothetical support should be. But if we come down here on a little more zoomed in chart, had we just bought at the top of that box, there would have been a good entry there potentially, but we're very clearly trading against a downtrend, and we don't want to be trading against downtrends. We don't want to be buying against downtrends on the trading time frame. And if you would have bought just the support right there, the market went 60 points under, and for higher margin accounts, 60 points is a pretty big drawdown. We don't really want to eat that. So we have a major area of support and we need to wait for some sort of signal. So what sort of signal should we wait for? One of them is a break of structure. So we see that if we're marking lower highs here, so this is a swing high, swing high, swing high, we can draw a line from there, and we have swing lows doing the same sort of thing. This new high here indicates that the trend has shifted. It doesn't necessarily mean that we've got an uptrend going on here, but it's no longer going down. So that kind of opens up the trade in the sense that once we have a new high here, we're moving sideways at worst. It could always continue down, and this uptrend here could fail, and it sort of looked like it did a little bit. But the point being, once we have a shift from a downtrend to a sideways state, that is the first possible signal that we can buy. And when I say shift to a sideways state, if we're trading on a 15-second chart or a 5-second chart or a 1-second chart, a sideways state needs to be in the longer term time frame. So that would either be a 1-minute chart, a 3-minute chart, a 5-minute chart. But you can see here that we have down to a 15-second chart now. This is a swing high, and the market has shifted on that time frame. It retraces all the way back to the green box. So the first signal you could have is hypothetically just buy the green box again. I don't like to do that. I like to pair micro time frames like the 15-second with the longer term time frame. So once we have this break of structure, the shift to a sideways market state, where should we be buying? Well, some of the best entries are going to be off of failed initiative selling. What is initiative selling? Initiative selling is people who are pushing the market down. They're selling at lower prices because it's breaking. Either they need to liquidate their positions, or they think that the breakout trend is continuing. They're kind of excited and pushing it down. But when those people's trades fail, that is a good area of opportunity. So we can look at these areas. Some of the ways we can do that are either failed delta levels. So if we look here, where's the failed delta level? There's a couple, and we see the market is responding to them. One of the better ways to do that is to actually look for failed inverted fair value gaps. So right here we see a big push down. I'm going to clear some of these drawings. So right here we see a big push down, and the market goes back above that. That's actually a break of structure on the shorter term time frame, and that becomes an area to enter. So if we're talking about the shift to a sideways state, once you have this new high on this time frame, if you're just scalping, you can enter there. We have this shift here. This was the initial shift on the longer term time frame. Where are the inverted fair value gaps? Buying right there is still viable. We pushed a little bit below it, but if you think this is a major reversal, putting your stop somewhere down here and holding for a trend continuation is a pretty good move. If we take the same concepts and move them, just to different prices, this is another initiative push down here, and that's the low of that. So had you done the same thing where you buy here and moved your stop to here and just held it for a trend reversal, you would have had a really good entry, and then you could look for your profit taking. Another example of a shift of structure is when we're talking about high volume nodes. And we see here that as the market's coming down in this downtrend, I'll get rid of these green boxes so it's a little bit more simple and coherent. As this is coming below this, the majority of the volume has accumulated inside of this area where that band is drawn. We use the fixed range volume profile indicator, and then we can see where these high volume nodes are. Another push above this band implies that this is now another structural shift. In fact, on the longer term time frame, now that we have two new swing highs, so first shift of the swing high indicates a sideways market state. Now that we have another new high, if we're being technical, this is now a uptrend on the longer term time frame. So the market state is up. And then where do we look to enter that? Same exact concept. We have the shift of structure because of the two new highs and the inversion of this high volume node. You could buy inside of the high volume node potentially. What works even better is when you have a high volume node and right here, confluent initiative push down. This right here is the best entry for the reversal. You have multiple shifts of structure. You have a structural uptrend. You have an inversion of a high volume node. And then you wait for the market to push slightly above that, retraces to that failed initiative push. Traders here think that this is all support, or resistance, I mean. Why? Well, because there's plenty of reasons. We have fair value gaps, we have high volume nodes, et cetera, et cetera. We see responses to all of these locations, but they all break because the immediate trend is now up here off of major support. And when you have longer term buyers propping the market up here and all of these trapped short term traders, they're all either initiating long positions, like buying because they need to establish positions for the next coming days or weeks, or in this case because they got stuck and now they're getting forced out here. And we can see that if we would have bought here and just held, market just goes pretty much straight up here. There's some minor pullbacks, but then if we look at the trend following video and we just use things like harmonics, really the only first major pullback was here and it barely touched below that. Or if we use the one bag candles, I'll link to the trend following video, and that can give you an idea of when you hit these reversals, you hit the entry, how do you hold that position and maintain it. But this is the best technical setup for buying a bullish reversal here. If you like the content or find it helpful, subscribe to it. I'll keep making these videos. Thanks again.